All right, let's try that again. Good morning and happy Monday. Now, can everybody hear me and see my screen? There we go. That's better. That mute button can be tricky. Nasdaq down, futures down 5% at one point. That was pretty spiffy, but bouncing back pretty persistent here the past few hours. But yeah, what a minute there. I thought my eyes were deceiving me because I was actually up. I got up. I think I just go in the bathroom or getting a drink of water or something. And pulled up the Nasdaq futures and I saw they were down over 1,000. Like, wait, what? Well, something's wrong with my phone. S&P holding up better. So we came into the week thinking lower. Not sure if 3 to 5% was what we were thinking, but looked like maybe a pullback was in the offing. So currently we're looking at a gap down to here. So not exactly what we meant by a pullback, but I tell you, if the S&P did put in any kind of meaningful peak last week, that would give us only our sixth monthly momentum divergence in about 30 years. It's been 5-0. Well, let's talk about that while we're looking at it. Anybody not familiar with the momentum divergence? Right, Jason? I like it. Movement is always good. Hey, Eric. Good morning. Sal, everybody. Eric, were you on that primetime call Thursday where we talked about possibly a little get together here in Columbus? Just want to make sure that you didn't miss that in case that's something that would interest you, since you and I haven't been able to figure that thing out. But to answer your question, yeah, you know how we like the volatility. It's always a good thing for us. Now, when we have moves like this, I don't know that I'd be right out of the gate. I'm not sitting there thinking to myself, this is going to go X amount lower, that we're going to recover. I think it's one of those days where, like most, kind of want to see where we end up, right? Like, what does it look like at the end to help us forecast moving forward? Uh, but I can tell you for bigger moves, um, you know what? I've been doing this now, coaching and teaching. Yeah, let me know if you want to be a part of that little invite there, because I was going to send it out today. Um, other thing. Oh, so what? I've been coaching for 17 years now, and I don't really call corrections or bear markets very often. We talk a lot about the environment being right, and heck, we started off this year looking at some charts and such that kind of let us, hey, maybe the environment is right for that type of you know, market. But as far as actually calling, hey, correction and bear market, very rarely, um, if I do I make those kind of calls. No different than with calling bottoms and such. When I have, um, again, which is rare, thanks to the market, I have a perfect track record. I am batting 1,000. So let me show you why. Okay, and it's not me; it's just the market. Right. So let's take a look here, and we'll focus on how we've been able to call the last few because they're right here in front of you. Okay. So anybody that's not familiar with it, right? I have the S&P. Now these are monthly candles you're looking at, so big picture. All right. And down at the bottom, that is your RSI, your relative strength index. And I think, one of the now I wasn't coaching back here, so no, I didn't call anything back here, but I'm highlighting the divergence. This was the first time that I made an actual call based on that, saying, hey, look, I think the market might be in trouble here. Okay, if you look closely, right, see the S&P peak, roll down, run up to a new high. That was all she wrote. Once we start to roll back over, I want you to notice down here, peak number one right here. Here's your RSI. And remember, pound for pound, the RSI is moving with price, right? This is price. It's a regurgitation of price. So as we're going up and hitting peaks, same thing here. Going up, hitting peaks, same thing here. Same thing here, right? So keep that in mind. So as we go to peak one here, you'll see RSI peak. But when we go to that higher price peak, look at the lower momentum peak. Okay. So think of it as simply, yeah, price is going higher, but it's weaker. Momentum is weaker. Okay. The price strength is weaker. Um, the analogy I was taught forever ago, which I thought was a pretty good one, is just simply imagine, just kind of chucking a basketball up in the air or a ball up in the air of some kind. The momentum in which that ball is rising is going to start to decline before the actual ball does, right? And that's where, if you've heard the saying, momentum tends to lead price. That's kind of where it comes from, right? So, so this is that divergence warning us that, hey, could be a problem. Now, no different than with non-confirmations, right? So last week, those of you that are on my calls later in the week, I said, we could look back, and right now we have the S&P hitting new highs, not confirmed by the Dow. Not uncommon for that to tell us something's out of sync. Now, what you want to remember about divergences and non-confirmations, all right? One, they don't always appear at market peaks and bottoms because some of these lines here that you can see that look random, I can tell you that these are from positive momentum divergences, is what these are for. These are for shorter term. I know what they are. But right now we're focusing on these five. All right. Just because the market, when the market puts in a meaningful peak or bottom, doesn't mean it's going to be non confirmations and divergences there. Okay. So they're not always there. Number two, just because there's a momentum divergence or a non confirmation doesn't mean the market's going to peak or bottom, right? That's technical analysis 101, right? That's where you got to deal with these fools that don't know what they're talking about on, financial networks and Twitter, where they somehow, think they know it all, but they don't know enough to know that no one ever said, right, that technicals are guaranteed any more than your fundamentals are guaranteed, right? So we're just talking about environments, conditions, likelihood, probabilities, whatever you want to call it, right? So just because there's a momentum divergence doesn't mean we are going to peak or bottom. The more accurate statement is a lot of times at major peaks and bottoms, there were momentum divergences and or non-confirmations. The next thing you want to remember is scale. Okay. The larger the scale, the more accurate, more reliable, I guess you could say, and the larger the implication, right? So, in other words, these five momentum divergence that I have highlighted here, one, two, three, four, five, only five of them, as you can see, potentially setting up for a sixth over here. Okay, and I typically only focus on divergences in overbought territory, right? So I don't really care too much. Like right here, technically, we could say, right, momentum was weaker here and here. Didn't really do anything, did it? I've never really noticed the reliability of anything in there. It's more up here where where we get kind of stretched, pretty high. So you kind of want that to be there as well. But um, so keep in mind, right? A negative, in this case, negative divergence on a 5 minute chart doesn't mean a whole lot. Okay. It's 5 minutes. Who cares? Not hard to put one of those in. Only takes 5 minutes of price action, so to speak, or 5 minute sets. Okay. So the problem with small scale like that is you can fire off more of those signals, which obviously, as you can probably imagine, increases the likelihood of failure. This is a monthly scale. All right. So if you pan out, an hourly scale would be a little bit, you're going to see less quote signals. It's not really a signal as much as an environment, right? This isn't a signal necessarily as much as, hey, be careful, right? So the more of these, we'll call it signals, but you get my point. If you go out to an hourly, you're going to get fewer signals because it takes more time, right? A little harder to make it happen. You need the right things to take place for a longer period of time. Pan out to a daily, you're going to see less, right? If I pull up a 1 year chart of the S&P or Dow, I might see one, maybe two for the year. You pan out to the weeklies, you might see none. I've panned out to the monthly now. This is going back 30 years. There have only been five. All right. So, everybody with me? Or anybody not with me on that front? Because again, I'm not tooting my horn. I'm saying I'm not somebody that walks around just yelling for correction. Right? Everybody's trying to call the top, right? It's even a gimmick out there, right? If I just keep calling the top all the time, eventually one of the times is going to be right. I will take that time. I will send out in all these newsletters and run a whole bunch of Facebook ads, and everybody thinks I'm a genius, right? It's even a gimmick, no different than calling bottoms, right? And the reason why I don't, to the best of my knowledge, have never been wrong is because I'm not the one making the call. The market is. Look, there's five of these instances. I didn't do that. I'm just telling you what the market's saying. What the market is saying on a very large scale is we're running out of gas. After a big, 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 big run, what we know for a fact is every big run ends eventually, period. End of story. The market is saying we have went on a very big run. We have went on a very big run. We have went on a very big run. We have went on a very big run, right? So it's almost like elementary, right? Back of the napkin type of thing. And look, it's been a long time. We should be due, right? Would anybody be surprised? Doesn't it seem like we haven't actually had a north of 10 percenter in this entire 2+ year run up? Okay. I mean, we nibbled on the edges twice, but we haven't had a nice big doozy. So just kind of knowing that, hey, after big runs, you're due. After big runs, you're kind of due. Historically, what, 1.5 years per correction? Don't you look at this and go, man, sure seems like we might be due. Okay. And we're pulling ourselves into that. So those of you, I don't really care about overbought and oversold that much. Okay. But a lot of people do. Hey, we're in overbought or we're in oversold territory here. Okay. I would say it's kind of like that environment is right for a reversal. But I don't know that I would, especially on a monthly scale here, I don't know that this would be a quote signal of any kind, right? You can stay overbought and oversold for quite some time. And this is monthly. Okay. So imagine how many months, right? We were oversold here. So here was one. This was the first one I called, right? So when I very first started coaching was back here. Then here was our little 18 percenter. Here was that little 20 percenter. Okay. Here was the COVID, right? There was no momentum divergence here, but I'll tell you there's some non-confirmations here. I think there was some daily momentum divergences before this ever happened. So it was kind of eerie, right? Because we want to blame that sell-off on COVID and the lockdowns, but the market was forecasting it ahead of time. So it was a little weird and freaky. And here's the one we called, the most recent one we called, 2022, right? So now imagine, think forward, as I always like to say. If the market drops today and continues to drop, now remember, this is monthly. So it would take some time to pull this guy down. We wouldn't know today or tomorrow or next week, but could be the setup for it. If a peak was put in last week, we could be seeing, the sixth monthly momentum divergence in the last 30 years. So far, 5-0. So if we did put that divergence in, what do you think would happen? Or not would happen, or what do you think might happen here? Okay. Now, please don't be that guy that was on my call last week that I showed him the charts and said, "Oh, I think I think we're going to boom." No, that is not what any rational person would ever think. Okay. Not based on what we're looking at. No one would look at those charts that I showed all of you to start the year and go, "You know what those charts tell me? Amazing year in front of us." No, they wouldn't. No one looking at those would say, those lead me to believe everything's going to be peachy. Okay. So don't be that guy because it's just really obnoxious and annoying. Right. And it tells me you're probably losing money in the market if you're that emotional and biased in your views that you can't take what you see. Right. Our job is to trade what we see. Remember, market doesn't care what we think, certainly doesn't care how we feel. It doesn't care who I voted for. It doesn't care what I think about our economy or what I think is going to happen with inflation. Market doesn't care. Right. So we have to trade what we see. So if we did put in that momentum divergence, I might be a little concerned. But remember, we already talked about this. Okay. My view, I have 100% confidence in my view that I think we are going to have a correction this year. I don't mean 100% we're going to have one. I mean, I'm 100% convinced probably having one this year. We're due. Signs are there. Will it be a bear market? I don't know. That's a whole other conversation for another day. As I said, I then default to what I see here. And what I've been saying for weeks and months is so far, I have not seen the signs that I need to see to call a correction. Now, let's go back to the most recent one because it was a two-parter. Okay, it's not just, hey, momentum divergence. We want, anybody know what I'm getting ready to say? It's great that we have the momentum divergence, but what else do we want? Those of you who've been with me for a while know, or probably should know. I don't know your name. It just says TA here. I would not act. Remember, nobody knows. Nobody knows what we would want to see in addition to the momentum divergence. What would we want to see? Because this answers TA's question. What would be the other thing we'd want to see for us to go, oh shit? So I'm answering your question here as we speak, TA. So, but I wouldn't do anything just because of the divergence. Remember, those divergences, markets kept going higher for months, and we didn't know right until after. Okay, I'm surprised nobody knows this answer. We'd want to see a price confirmation. Okay, so what was our price confirmation here? Right here was the momentum divergence. Okay, so we were waiting. What is our price confirmation? Well, that's where we got to do our job. For me, it was a breakout of this channel. Look at this perfect channel here, tested. Remember, the way I look at trend lines and channels, I don't look at it like most amateur. Well, maybe that's not a fair statement. I just don't think you connect any two dots and call it this major trend line. How about that? I don't think I've seen so much stuff like that on X that I'm like, I cannot believe you guys are technical analysts, right? Well, this kind of make it up, right? Like they had their kids, hey man, can you go find me a channel? No, I need something specific. I need something firm, and I need something that's very strong. And what I mean by that is just connecting 2 points and calling it a trend line to me isn't strong, is it? Wouldn't testing that trend line a third time be stronger, and a fourth and a fifth and a 10th and a 12th? Remember, the more times you test a line or a level, the more important it is. The more confidence we have, the market cares, but the more important it is, thus in turn, the more important the break of it is. So that's why you don't see me running around and connecting every two dots and saying, hey boys, major trend line. No, it's not. Okay. Now look at this channel. Look how many times the resistance had been tested. Then look at the support. Tested 3, 4, 5 times. This channel, market is saying this matters. So we went up to these new highs, started to roll down. Remember, now think about this. We couldn't get the divergence until we rolled over. Okay. So we can't pick a top. I didn't pick a top. The top was already in. We started talking about the divergence just like we are right now. Hey, it's possible. The setup is here for this momentum divergence. Once we rolled over, there it was. Now we want to see price breakdown. We broke. And that's when we said, hey, watch out, guys. Now, how far did we think we would fall? Anybody remember from calls how far? Because I made it very clear what I thought. It wasn't a specific number. Anybody remember what I said? That was on my calls back then. I realized these calls weren't being done back then. We weren't doing this YouTube stuff. Okay. Because this was obviously 2022. Anybody remember what the range I gave was? All right. Don't want to take up too much time, but 20 to 50%. Why did we say that? Okay. And what I want everyone to see here is I'm not a genius. We make things harder than they need to be. Just listen to the market. All right. The market will do a lot for you, but we're not looking at it anymore, right? We're too busy worried about news and fundamentals and all that nonsense and talking bobbleheads. We're too busy worried about magical indicators and unicorn stuff that's going to save our day. Just keep it simple. Divergence number one, market dropped 50 some odd percent. Divergence number two, market dropped 50 some odd percent. Divergence number three, 18%. Divergence number four, 20%. So basically, what I had coming into this is I had a sample size of four. I had basically two 50 percenters and two 20 percenters. Ta-da! Look at me. I didn't have to go to Harvard for that, folks. It's like, well, I don't know. And that's literally how I word it. Well, I don't know. I mean, based on what's happened the last four times, this sign right here, there's your divergence. Remember, we had to drop and break out of that channel. Market does what the market do. Looks like either 20 or 50%, somewhere in the middle. What did we get, folks? Right? So has nothing to do with me. It's just reading the market and doing, yes, sir, may I have another? Right? And we've done that every step of the way. Pretty major. This is actually kind of a bullish pattern here. Broke out of it. Hey, you should go higher. Look at us. Little trend line. If we break it, should go higher. Look at us. All right, we can do this all day, right? Look at this. Break it, probably going higher. Look at us. Break out of the wedge, probably going lower. Look at us. Break out of the channel, probably going lower. Look at us, right? So not too terribly challenging. Little flag we got here. Break out of the top of it, probably going higher. Yeah, look at us. That's all I ever do. Let's just read the market. It's hard enough. It's hard enough just doing that. Okay. So when we look at the fall today, which is obviously going to be the topic of the day, all right? I don't know that I'd make much of it until, we need to make something of it, right? We have already, going back to last year, we kind of highlighted some of those charts to start this year. But remember, in my calls at the end of last year, I said, hey, look, be careful out there, kiddos. I think that's the phrase I use. Be careful out there, right? It seems as if the environment is ripe for a big drop. Now, my technical that I like to look at is not showing me that yet. But I don't know, everybody. Look at what we just looked at. Can we just make it simple here? I got an idea. Pretty major channel here. Tested 1, 2, 3 times on the top side, twice on the bottom. So I got 5 test points here. Seems to be a valid channel. I got an idea. How do we break out of this channel? Maybe that's the time we have a party, right? I mean, let's go back. Can I count on that? Is that accurate? I don't know. Let's look. Broke out of this channel. Pretty accurate, wasn't it? And let's look at similar type of formations, if we will. Look at this wedge. Broke out of that. I don't know. Pretty reliable. So we're 2-0 now. If we count bullish ones, we're 3-0. Bearish one, 4-0. Shall we keep going? Trend line, 5-0. Look at this. Is kind of cool when I move this. Look at the little 30-day moving average. Looks like a snake. Just kind of going. Isn't that cool? Probably not. All right, where were we? 5-0. 1, 2, 3, 4, 5. Yes, we're 5-0. With these Again, important patterns and important lines. This was a line. We didn't connect 2 points. This was one, two, three, four, break. Right? Okay, so let's keep going. What happens with this one? Not only does it imply lower, we went lower. Not as low as we thought, by the way, but we did go lower. 6-0. How about this big break here? We know that led to a good party, right? 7-0. How about this channel? Expect to go lower. How'd that work out? Okay, 8-0. Everybody getting the point? How about this trend line tested 4 or 5 times? Break it, 9-0. Sure enough, we went higher. Oh no, what if we break out of this channel? Maybe this is a failure, right? It's only a 2 or 3 day. So let's be fair. Let's call it 9-1. Okay. How about when we broke out of this guy? We could go lower? Sure did. 10-1. Breaking out of this one. It's kind of a push, but I'll give you the loss. We're 10-2. All right. Let's keep going. How about breaking this trend line? That lead to some good things? Sure did. 11-2. How about this bearish wedge that we highlighted? Yep. 12-2. How about this channel? Did that lead to something? I think that was almost 10% total. 13-2. What about this bullish pattern? Talked about it way before we ever broke out. We started talking about this 2 Mondays ago. So is that 14-2? So again, what do you see in front of you? You have every right to say, I don't think that's a valid channel. But if you do, and I just went back the last 5 years, when it comes to important trend lines and or channel consolidations, the S&P has been 14-2 of doing exactly what it told you it was going to do. So break out of the bottom of that channel. What do you think? What do you think? Right? Any questions? So unfortunately, I'm not going to go chicken little just because we're down 3, 4, 5% today. All right. Who cares? All right. All we have to do is go back here. Remember this gem when we woke up to this one? That was the end of the drop, right? So what does the lay average amateur do? Oh my gosh, buy puts, buy puts, right in your face. Okay. Right. So be patient. Wait for your moment. Everybody's quiet today. By the way, TA, did that answer your question? So in other words, I wouldn't do anything. Now, if you're a trader, we love it. Going back to Eric's point, we love this. You know, volatility is great for us. We struggle when there's not real volatility. And we have been. Prime time at least has, because we don't have any real volatility in the market. We try to capture it with stocks. Same thing happened to us in 2021. Look at our track record. We stalled for like 6 months. Last year, we had the best 6 months we've ever had. Right. So we like that volatility. It helps us a lot. Right. So placing trades today, what do I do? By the way, Tia, you still here? Did I answer your question? So again, this isn't a doom and gloom call. I'm just preparing you what to watch for, and then I want to see price confirmation. Otherwise, this is a bull market. Trend is up. Right? Anything contained within this channel, trend is up. So, all right, I'll let everybody run and get to it. My advice as far as trading is like I would be in and active and probably on both sides, because I can't tell you we're going to recover from here or that it's not going to lead to more. I think big moves and pops and drops like this are difficult, can be, a little bit more difficult than slow and steady wins the race type thing. So when you have this type of volatility, being on both sides of it with a strangle or even a straddle, which probably won't work this early in the week with the high in volatility. But my point is, being on both sides of it, it's difficult. Um, it's a pretty good environment to be in. So, all right, I'll let everybody run. Have a great week. See you next Monday.